The European ETF market continued its meteoric rise in 2020. According to data from Morningstar, the European industry saw inflows of €102.7 billion, just shy of the 2019 record of €105.7 billion, with total assets under management of €1.1 trillion as of New Year's Eve 2020. Credit Suisse Asset Management made a dramatic return 7 years after selling its ETF business to BlackRock in 2013. The Swiss asset manager had a positive start, seeing inflows of €1.8 billion in 2020 across its range of ESG ETFs. Also entering the market were two thematic ETF specialists. Former LGIM colleagues launched Rize ETF at the start of the year, while US ETF issuer Global X made its European entrance in December with the launch of two ETFs. ESG was the biggest trend in the European ETF ecosystem last year. According to data from Lyxor, ESG ETFs in Europe saw a record €45.5 billion inflows over the past 12 months. Issuers launched 85 ESG ETFs last year, which is significantly more than the past 2 years combined. Furthermore, according to the Index Industry Association, there was a record 40% increase in the number of ESG indices over the past year. ESG ETF assets were very sticky compared to non-ESG ETF assets. In March, during the height of the coronavirus volatility, ESG ETFs saw inflows of €730 million versus a record €22 billion outflows for the whole European ETF market. The pandemic highlighted the impressive growth in demand for ESG investments, with ESG ETFs continuing their evolution towards becoming new market standards, having been perceived as niche products just a few years ago, said Vincent Denoyser, head of ETF research and solutions at Lyxor. There was extreme volatility in March of 2020. Fixed income ETFs saw their discounts to net asset values jump to all-time highs. The discounts represented real-time prices compared to the underlying bond market, which was seeing minimal trades and was therefore in catch-up mode. For example, on the 12th of March, the iShares Dollar Corp Bond UCITS ETF traded 1,000 times, while its underlying securities traded only 37 times. The Bank of England also highlighted the importance of the secondary market in giving ETFs an added layer of liquidity, saying, "The secondary market trading of ETFs means there is lower risk of a dynamic that incentivizes the fire sales of their underlying assets." Overall, fixed income ETFs saw $36.9 billion inflows in 2020. According to BlackRock, more than 60 institutional investors became first-time buyers of fixed income ETFs after the record discounts. The European Fund and Asset Management Association has created a framework for classifying the ETP landscape. It has split ETPs into 3 distinct categories: exchange-traded funds, exchange-traded commodities, and exchange-traded notes. We believe that a greater understanding around different types of ETPs is needed. This is prompted by the all-too-frequent confusion between these products, as witnessed again earlier this year during the COVID-19 induced market corrections, as well as by retail investors' growing interest in these products, said Federico Copelli, Senior Regulatory Affairs Advisor at ePharma. As ever, do visit etfstream.com to stay up to date with news and events in the sector.